Candle Range Theory Trader, back with you with another video, just back testing daily liquidity sweeps. And along with candle range theory. So I don't just trade straight up liquidity sweeps. There's a little bit more to it, to me at least. This is how I trade. So in terms of finding a good candle two to make you have a good candle three, what I'm going to do is just pick a few random charts and talk you through how we can trade that with the candle range theory. So if you don't know, while there's lots of different liquidity sweep indicators out there, I like mark levels, and this is how I set it up. You can just go to indicators, you type in mark levels, it'll be right there. And when you go to the settings, you'll just be sure that sweeps is checked, and you can make it any color you want. And I just stick in the lineup, have it at 3. So every time you see a blue line here, that's going to mean a liquidity sweep. What is a liquidity sweep? Put simply, it is when price sweeps below an old swing low or above an old swing high, closes inside of it, and typically reverses. Does this work 100% of the time? No, it does not. Okay, but can it work enough for you to be successful in trading? Yes, it can. So even though we have one obvious one here, I'm going to backtest this. I'm going to talk you through how we can trade this using the candle range theory. So I'm going to do the replay option and just pick a random bar here on EuroCAD, and we're going to find a sweep. So here's one right here. Now this may or may not hold. We'll see. But as we can see here, here's a swing low. So then we just wait for all of these long holders here to hopefully be stopped out and price to reverse. But in order for it to be valid, this swing does have to hold. In terms of candle range theory, how would I frame this? If I saw this on the daily chart, I would be long heading into this day right here, and I would frame this as candle 1. So the candle that makes the sweep is my candle 2, and the candle before it is candle 1. So I would do like that, right? Like this. So I'll be long here. Now, obviously, as we can see, that this was not a good long day. So this might be a loser, but I'm going to go forward one more day and see what happens. Another thing you can do, though, is wait for a candle to actually close inside of the range on the daily and then just take the continuation. That's the safest bet, believe it or not. So after you get a candle 2, you can wait for candle 3 to possibly form and then hope for a candle 4. But let's go forward and see if candle 4 actually comes. Looks like it's not. Yeah, okay, so that would have been a one that did not hold. So I'm going to let this play a little bit more, and then we'll see if we can find another sweep. And if it doesn't come in short order, then we'll go to another one. But okay, we did get one. Actually, we got a couple. All right, so let's walk through these. So this one here was a sweep to the short side. So what do? A lot of these are going to be momentum trades. What do I mean by momentum trades? There are old videos like that on here that use a little bit of a different criteria, but it's the same idea, whereby if you have a candle range theory and candle 2 closes outside of the range, like this is candle 1, candle 2, and it's all the way up here, you need to see price close back inside candle 1's range before you would take it. So that's here. You're counting on this momentum here to the downside to continue. So what do you have? The sweep to the high, okay, takes out this swing high, closes inside of it just barely. Price tanks. I don't trade this candle. I start to go short here. So my daily bias for this day and this day is short. Okay, so even if you would have got in on the daily open of this candle right here, which was Thursday, if you'd have got in around the daily open, there were over 127 pips that were available to you. So hopefully you could have got some of them, right? At least 50 of them or so. Okay, something like that. All right. But this would be like considered to me in my book a momentum trade for the candle range theory. Right. So that's that. Now, in terms of this sweep right here, this is one of those tricky ones whereby the sweep held, but there will be times where price keeps poking at this low. So let's frame our range where, remember, we have candle 2. The candle that does the sweep to me is candle 2. So I framed the candle before it. This is candle 1. As long as the sweep holds, okay, so let me do that. If no candles can close below candle 2's low, then I'm going to stick with a long bias. But our momentum really doesn't start until right here. So the sweep happened on Tuesday, but our best trade actually would have been Friday, right? Because we had Monday, Tuesday, Wednesday, Thursday. The best trading day though would have been Friday. How? Because the momentum, it's just like over here, it closed inside candle 1 back here to go short. Over here, it closed inside candle one to go long. So if you'd open the price, open a trade around the open price of this day on Friday, that would have been good for 89 pips to the upside, right? So and then you just would have got the breakout, and then that's it. You would have been done. All right. So we'll get rid of that. Now let's go to another pair, and we'll do a couple more. So let's try. Let's try Aussie yen, and we're going to do a random day. All right, and we got a couple that are already here, so why not just take advantage of that? So this video won't be too long. So we have here, this is candle 2. So the candle before it will be candle 1. I'll mark the range of this candle. This will be another momentum trade because as we can see, the sweep candle, this low it held. So even though it poked down again, the best trade would have been right here, this Friday, right? So this was Monday, Tuesday, Wednesday, Thursday, Friday. Now as well, too, this is the low of the week. So had I not been trading liquidity, I would have been treating this as candle 1. It's an inexact science, but you got candle 1, candle 2, candle 3, candle 4. Both ways work. This way, this candle 4, though, to me, if this is going to be candle 1, if this is candle 1, candle 2, hoping for candle 3 doesn't come, then this momentum trade right here, to me, is a better bet because I'm certain that all the long holders from this swing low have already been stopped out. And I'm counting on the momentum from this trade here to be more certain. Either way works fine. Okay. But this one right here, you got 147 pips that were available to you. That's it. And then that's it. And then you just move to another pair. Right. So here's another long example over here. And sometimes the pattern will be a little cleaner. So you have candle 2, the sweep candle right there. So I frame candle 1 like so. Okay, again, you can start the trade here if you want to, or wait. Especially if it doesn't close inside of candle one's range, wait for the momentum to already be present. So then if you just wait for this candle to close here, you did have a pullback. But at the end of the day, if you got in around the low of the day or so, that was good for at least 100 pips or so on this candle right here. This was a Tuesday. All right. But it all comes after these liquidity sweeps. So my point is this, just me personally, I'm not trading without seeing a sweep somewhere. That's where I am with it. Because the way I used to trade is that just seeing this possible pattern, let me remove the indicator. Just seeing a doji that possibly closed beneath it was enough for me to take a trade. But now adding to the fact that it's going to purge liquidity first and just knowing that's how the market actually moves, it's just extra confluence is all. So am I saying you're going to be a millionaire if you start using liquidity sweeps? No, I'm not saying that at all. What I am saying, though, is that it can increase your odds for greater success if you do decide to employ it into your trading system. So I'll try one more pair. What was that? Aussie yen. So let's just do euro dollar. Why not? The most traded pair out there, the most liquid pair at least. All right, so we'll bring our indicators back up. Don't need the equal lows for that. I'm not going to worry about this stuff either. Just doing sweeps. And then let's find a random bar. Okay, so we're back in 2015. Okay, all right, so we have quite a few sweeps here. Sometimes you'll see sweeps too back to back. I'm glad this played out. But remember, your bias comes from the sweep. So you see here, we'll just operate from this one. So here's our sweeper candle, which we would consider candle 2. Let's mark candle 1 right there. We have a short bias because of the sweep. Right? Okay, so this here, we did have some momentum to the downside on this day. This was Friday. Monday did poke outside of the range, okay, but it did close back inside of it. And the sweep candle is still holding. The sweep is still here. So this just means that the way we read this is we think that sellers are trapped up here, trapped up here, trapped up here, right? Okay, I'm sorry, not sellers, but buyers. Buyers are trapped up here. There's a lot of buy activity. People are buying, expecting a breakout, but it didn't come, and then the market is tanked, right? So the best trading day would have been Monday going into Tuesday, or just Tuesday itself. Price fell 169 pips. Okay, I don't need all 169 to be successful. Okay, I really don't. Okay, you just need a piece of this action. Is it? Don't try to get the whole move. You don't need it. Okay, just take what you can get. Let's see. So let's try one more. Let's see if this sweep works out. So you have this swing low, okay, price poked below it, closed inside of it. So that would be like our candle 2. You could have got profit right here on this candle 3. Now we don't know if this is going to continue, but we can see. All right, so if you wanted to see if you can get a continuation off of that, you definitely can. Okay, well, that might have been it. That might have been the move right there. Yeah, let's just say it would have been. So this candle 3 was really perfect. This was textbook. So if you'd have got in around the daily open on that one, I mean, you're talking about 121, 20, over 140 pips. Okay, but you don't need all 140 once again. Okay, so all you need is a piece of this action, is my point. So, but like I said, liquidity. If you add liquidity to your trading arsenal, you can see some better results. Again, is it always going to work? No. But if you just trade these daily levels, yeah, you can do some real damage. Okay, so again, I showed you how to set up the indicator. I showed you how to mark the levels, how to mark the candle 1. Use candle 1's range as a guide to determine if you could see a continuation or not. But just trade the daily and then take your entries on the 5-minute chart, and you are golden. So that's it. I appreciate you watching. Thanks for your time and attention. And you know what? Let's take a look at the current chart right now just to see where we are. Matter of fact, I actually got a current trade on using this method. It may or may not work out. I don't know. But I got a short on dollar pound. A little late to the party, but off of this sweep right here. Right? So just a little bit of a continuation trade, though. Let me see here. Yeah, this one's a little different because if this sweep is candle, if this sweep right here is candle 2, right, then I'm really looking at a breakout at this point because that would be like candle 1. But it kept going up. But because this bias is holding, that's why I'm still shorting. I'm just looking at this day as being a short. It may or may not work out. Euro dollar was a little bit cleaner because it had a more recent sweep right here. This is the current chart. This is the live chart. Matter of fact, and I'll shrink down and show you a good entry on this. So I'll mark out candle 1 like that for a short, like so. Okay, like that. And then as long as I said, with that sweep holding, okay, you had one good move that was here, but then you have another one to the downside right here. And let's go down to our 5-minute chart. And again, I showed you a video about entry models. Look at the video prior to this one. But if you want to use like a sweep model of a sweep of a high and then a fair value gap, your best entry would have been right here at 10:45 a.m. Okay, as soon as you enter on that candle's open, your stop loss goes above the candle that makes the sweep. If you'd have taken that trade at this and put your entry above it, you probably already would have been out. Yeah, that was good for at least a 1-to-1, one to, let me see here, stop loss of about 10, say 11 or so. And yeah, close to a 1-to-2. Not quite, but close to it. You know, I don't do like 5-pip stop losses. That's kind of like unrealistic to me, at least. But yeah, you know, like you need to have an entry model too. It's more, you need to have more than just a bias and enter randomly. All right, you need to have an entry model. My entry model, you know, I just looked at the sweep and a fair value gap. That was enough for me. So, and it's still going down. That's my entry right there. Okay, live chart. Okay, but in any event, okay, so yeah, hopefully that helps you guys. Again, daily levels. Daily levels, I watch all the pairs and just trade what I see. And when I see a sweep that goes on my watch list, I don't worry about the fair value gaps on the daily chart. I used to, but now it's done. Sweeps to me are more of a confluence of downside moves. Okay, that's it. I appreciate you watching. Have a great rest of your day. Take care.